Mid-cap index is actually now in the green. So surprise, surprise, there is that bounce that perhaps we were expecting, and it has come through. The Nifty as well has recovered from the lows. So the low point on the Nifty was 17,216. Now we are at 17,325. So over 100-point recovery is what you have seen from the lows. Looks like people are, they can't wait to buy quality names in this market. Lots of stocks picking up, but let me talk a little bit about the quarterly performance of some companies. It was a strong quarter from Cummins India, well ahead of estimates, as the power generation and the industrial segments picked up on a low base, while new launches over the past few months aided the revenues. Ajay Patil, the CFO at Cummins India, joins us now to talk about that. Mr. Patil, good morning and thanks for joining us on CNBC TV18. You know, the growth this time was led by the power generation business, and that has been pretty robust. The power generation sales went up 81% in Q2. Tell us a little bit about the second half of the year. Do you see the same kind of momentum, and what could the growth be?
Hi, good morning to all of you. Yes, indeed, I think we have seen a pretty strong quarter which is just concluded. What we are seeing is, as we look into the second half of the year, the end markets, especially when it comes to data center, commercial real estate, residential real estate, infrastructure, and healthcare, continue the momentum is what we are expecting. Power generation has been the mainstay of our business for many years and continues to be so. For the quarter which has gone by, I think one of the reasons also for that quarter was we also have a kind of a lumpy projects business into our portfolio. And we had some bit of revenue coming out of that segment into the quarter, which will have some revenue in the current quarter, but may not be to the same measure as what we had in the previous quarter. But all in all, for power gen, I think from an end market perspective, we are quite optimistic about the continued growth momentum into the second half of the year also.
Mr. Patil, could you tell us, so COVID cases, especially in Europe, are rising once again. We are starting to see some lockdowns. Is that going to lead to any impact on exports for you? Are you starting to see anything at all?
Well, from an exports point of view, we have a fairly diversified market profile from an export standpoint. So certainly the rising cases in Europe is a cause of concern because of the consequential impact on economic activities. But our exports revenue is kind of well diversified across multiple geographies. So while we will have to wait and watch as to how the European markets and economic activities get impacted, but overall from an export standpoint, we are fairly optimistic and feel that we will sustain the momentum on our exports revenue.
Will sustain the momentum on your exports revenue. All right. You won a very large data center order in Q2, and that seems to be the buzzword now in the industry. Can you tell us what is the scope of the business in data centers, and what kind of revenue growth are you looking at? Any more orders in the pipeline?
Well, I think from a data center perspective, if I take a step back and try to get a little broader perspective from an India point of view, I think when we look at the extent of mobile phone penetration, the extent of takeoff that we have seen on the e-commerce and the overall digitization in the financial services, I think the need for data center is here for us to stay. If one believes the different reports that are coming out, over the next 3 to 5 years, it is expected that broadly about $8 to $10 billion of investment is required into the data center. And we do see that momentum into data center coming. From our standpoint, I think we have a fairly robust product offering into data center. As all of us know, the reliability level in a data center is close to being 100% at all times. And therefore, the data center operators look for a reliable partner who can offer a standby power technologies which can meet the stringent requirement of performance for data centers. So I certainly look at data center as one of our fastest growing end market. We have been seeing a good order intake from the data center market, and even for current quarter as well as for the quarter 4 of the current year, I'm very optimistic that we will sustain our data center revenue for the coming 2 quarters, as well as getting into 2022 as well.
Okay. Just a quick word on the market, Mr. Patil, just stay with us. So we bounced about 130, 140 odd points from the day's lowest point, something which, we were highlighting earlier, that the market very near term is extremely oversold and you may get a bounce. So we saw that bounce. Now the question is that the end of the bounce already, because the market after, recovering sharply, starting to come off a little bit again. But this is something which we see every time. After, days of correction, you get a bounce. And the first bounce usually, because there is no clarity whether this is going to last on, is the uptrend durable? And people will try and sell this one because, the trend has been lower. Especially people on the momentum side will try and sell this one. So I think there is a bit of a tug of war going on both sides, just to see where the market holds, which is the level where the market kind of is able to hold on to at this point in time. So that's essentially what you're seeing right now. A little bit of volatility after a sharp recovery. 17,358 now on the Nifty. The Nifty Bank is also sharply off. It's actually barely down 0.12%, and I think the mid-cap index is in the green now, 0.5% or so. So this is, we'll keep coming back to the market as well. Sonia.
And there's so much buying, right? I was just talking about the mid-cap IT names. KPIT Technologies up almost about 3% odd. A whole host of other names. The cement stocks have suddenly started seeing buying. McDowell's Holdings is up almost about 5% odd. So this is a market that clearly people are looking at to buy some stocks in. But before we end the discussion with Mr. Patil, I just wanted some final thoughts from him. Mr. Patil, I just wanted your thoughts on the input costs and the impact that all of this would have on margins, because actually in the first half of the year, you've managed to grow your margins quite well at about almost 14% versus 10% last year. You think you can do better in the second half?
No, obviously, all our endeavor is to continue to drive our margin expansion. Certainly, the input costs primarily driven by the core commodities that we consume, be it steel, copper, nickel, and others. We have seen a substantial rise in a very short period of time, which definitely impact our input cost and consequently have an impact on margin. Having said, I think internally we have been focused on 2 sets of actions. One is we into a business where we have engineered product. It's not that we have off-the-shelf product. So therefore, it allows us to do a very structured, look at our cost. And we have a well-defined program as to how we look at our cost reduction programs from quarter after quarter. And that has certainly been one aspect which has helped us. And partially, also, we did a tactical pricing action. So when you look at a combination of what we did on pricing side and what we did continue to do in managing our material cost has certainly helped us to expand our margin. And not to say, we have been pretty prudent about managing our fixed cost now over the last few quarters. So when you put all these 3 things together, and the 4th one, obviously, the volume leverage certainly helped us in delivering a good margin expansion for the quarter.
Okay, all right, Mr. Patil, we'll leave it on that note. Let's take a very quick break. We'll come back on the other side and get another conversation going. Chat with